Today is April 17, 12:26 p.m. We saw some unusual options on Tesla. And since it is reporting earnings pretty soon on April 19, which is just 2 days away, we wanted to make everybody aware of these unusual options. So, without further ado, let's take a look. So this just happened less than 2 hours ago at 10:49 in the morning. You'll see these 10,000 contracts at the 170 strike puts, right? And we'll, if we look at these trades, you'll notice that the 170 was bought at the 310, and then the 160 was sold at 132, which is much below the market bid-ask pricing. You see here the bid was actually 133, but they got this for even less at 132. So that was quite interesting. And though you want to keep in mind that this 160 put is actually, the volume here is actually less than the open interest. So it's something that we'll be monitoring to make sure that this was an open order and not a closing order. You'll see also here the 170 puts that were purchased. This volume is definitely greater than the open interest, so this was definitely an open order at the 170 strikes. We are also in this position as well. This is basically shorting Tesla and believing that it will go down at 170 strikes. So is that possible? If we kind of zoom out a little bit, obviously because of earnings, that is definitely possible. And back in March 13, we were trading at the 170 level. Also on March 10, there was this 170 being traded, and so this 170 is possible. It could also have been a hedge that some large institution has Tesla shares, and they bought these as a way to hedge in case it did drop after earnings. So that's something to also take into account, that this does not necessarily mean they definitely know it's going to go down, but it's something to keep an eye on, because they paid about, they paid 310 minus 130. So 132, they paid about $178 for this per contract. And you multiply that by 10,000 of these contracts. And so they paid $1.78 million on this. Either strong belief that it'll go down, or a hedge that they paid. So something to keep in mind, that this is overlapping earnings. Okay. And we can also take a look also at this one here, this very large trade. However, even though this is 25,000 contracts, we have to keep in mind that these are in the money. That's why they're shaded purple in the background. These are all in the money. You see their deltas are very high, from 1 to 90. These are all in the 80 and 120 calls. So because these are very deep in the money, they don't necessarily provide much directional bias. So we don't necessarily use this for our analysis. And if we looked at, let's take a look at the 80 calls and the 120 calls and see if are these opening or closing orders. So that that's August and April 21. So the 80 calls are down over here. You'll notice here that these 25,000 actually is less. And so it looks like they're closing orders. It's not a coincidence that it is also 25,000. Very similar in numbers. That this could have just been a closing order. And then if we look at the August, the 120 calls, you'll see here that it's actually the 25,000 is here. So what it looks like is that they closed those 80 calls, those near-term Aprils, and opened up new orders here. They opened up the 120 calls here and rolled it out further in date because of the potential risk with earnings. So that's what it looks like, what they did here. So they just moved their strikes, the 80 calls to the 120 calls. It was originally at the 1 delta, the 100 deltas. So now they're doing 90 deltas. So since that was very deep in the money, and now they're getting a little bit out, but it's still in the money. It's 90, right? So looks more like a rolling order. Okay, so back to this earnings and this. So this is the question: will it go down after earnings, or will it go up? Right? And so there's that potential hedge that we saw today, and to kind of answer that question, or it could be a short at the 170 strikes. Okay, all right, and hope this was helpful. And please give us a like and subscribe if you haven't. Take care, everybody.